I am your co-host, Jared Lee.
And I'm Ben Rose, and I'm not alone.
You are not. We are joined today by James Willison, Managing Director at WCL. Welcome, James.
Thanks for having me. Lovely to be here. What an amazing setting.
Right, yeah, welcome to the studio.
Yeah, it feels like a very professional setting. All right.
We do our best. But you've been in the industry. We'll dive straight in. Love to get an intro on yourself and sort of how you landed in the space, the sort of reinsurance insurance technology space that WCL occupies, and we'll sort of unpack a bit about what you guys do as a business, and would love to dive into this episode about sort of London market's ambitions, the sort of innovation efforts we're sort of pushing here for this market. But first, tell us a bit about your journey into reinsurance technology.
Yeah, so like a lot of people, I assume, it wasn't necessarily the immediate path I was due to take. So my background was law and accountancy originally. I did a couple of jobs for the government for a while, also worked in the hospitality industry, and then started working for a consultancy firm who were focused purely in the London insurance market, looking at reform, electronic placing, electronic claims, electronic accounting, very similar themes to what we see today. Worked for that consultancy firm for a number of years, and then got the opportunity to join Web Connectivity, WCL, kind of in its infancy. We've been going for 20 years. I've been there for 18 years now. As MD, wasn't a real technologist by background, which I think was seen as a positive for running a technology company in the London market to a certain extent, and have been there ever since. Been through 2 acquisitions during that time, which has been, which I think means my job isn't the same. Over that period of time, it's varied quite a bit. But
yeah. And give the listenership a very high level of sort of what WCL does and what you're trying to achieve.
So at the absolute highest level, we're looking to securely move data and documents between trading partners. So brokers, insurers, brokers and reinsurers, cedents and reinsurers. That's at the very sort of top level. We then look at each sort of function of insurance, so placement, so exchanging capital for risk, accounting and settlement, so kind of moving the cash or establishing what the amount of money should be, and then the claims processes. And I guess any aspect of those which are done manually today, so whenever we're rekeying information in that process, we're then allowing the automation of that.
Yeah, brilliant. No, and you've been roped in because of your extensive experience here, because I know the audience of the Reinsurance podcast has been putting up with our sort of loose global reinsurance knowledge over a period of time, but never really the granular detail of what's been going on, especially in the London market, especially around technology. I think, I started my own journey within London market technology in 2013.
Right.
And then it seemed like, every new thing that happened was the brand new next biggest thing that was going to, take over the market and transform it. But I presume you've seen versions of that story happening all the way back to the early 2000s, I guess.
I mean, I think it's a kind of positive and negative to a certain extent.
Yeah.
So we haven't fundamentally changed what we're trying to do, but we've had various iterations or various goes at it, and that has a sort of positive and negative connotation in terms of how people perceive it. I think if we take today's example specifically, so there's a project which is Blueprint 2. By very definition, there was a Blueprint 1, so Blueprint 2. So we are always evolving, and I think working towards the right result. If we take Blueprint 2, there's certain London market infrastructure. I know, Posh and Lids is kind of these systems which sit at the heart of the London market. They first came online in the 1970s. Right, so this is relatively old technology, and at the time, for its time, it was very kind of futuristic. Started doing messaging, moving structured data about, and no one else is really doing that. And if we look at its essence of what Blueprint 2 is saying to do, or looking to do now, is take those two sets of infrastructure, Posh and Lids, and replace it with something called IPOS and ICOS. So they're rebuilding from the ground up the new set of infrastructure. In doing that, sort of phase 1 is to replicate the same messages which come out today, same set of data, but it allows them to use globally, internationally recognised standards from phase 2. So they actually align London with the rest of the world. And that's the really key element, is that if we go back to the 1970s, there weren't standards everywhere else. It was paper and manual processes. The rest of the world has moved on during that time. They've adopted internationally agreed Accord standards. They're being used elsewhere all around the world. London has sort of held on to this proprietary messaging, and that's started to get to the stage where it holds London back a little bit. So if you align London to the rest of the world, makes it easier to do business into London, and then all the efficiencies which come on the back of that.
Yeah, that's interesting. You mentioned that in sort of the 70s, when this was sort of first kicking off, there weren't those standards. Do you have any thoughts as to why London didn't push or introduce that? Like, how is it that they sort of stuck to one and then everyone else created their own version, and then they had now we have to sort of adapt back? But we could have had it where London sort of pushed their standards out earlier. Is that?
Yeah, I think you very quickly get into the sort of Londonisms. There's a whole technology debate you can have. I mean, we were talking about EDI standards back in the 70s when it was created. And now, generally, if you're having a standard, it wouldn't be EDI, it'd be XML, and then you've got JSON standards and other data standards which are evolving. So it's very hard once you've been the first to kind of push that through if some of the technology become dated. So there's a kind of an issue there. I do think, and it's actually a kind of caveat that I'll add to the Blueprint 2 piece at the moment, is that you can recreate, that the standards were set up to be very, very specific and proprietary to the London market. And the rest of the world doesn't operate in the same way as London. I mean, so very basic example, you have the London Market Bureau, or Valenetic as it now is, or joint venture as it previously called, exchanging, insurance services, but that piece that's at the centre, that doesn't exist anywhere else. So all of the data standards which revolved around that weren't then applicable necessarily to elsewhere.
And that's a result of the original London structure being all the syndicates that operate in one way independently and in another way collectively, which does, as you said, doesn't exist elsewhere. Companies sort of act concept, for themselves everywhere else in the world.
Yeah, and I think it's a really important note in there as well, is that you've got, in the London market, you have all the Lloyd's managing agents and the syndicates within that, but also there's an entire London company market which is operating, which utilises the bureau as well, sort of outside of Lloyd's, but that's a similar, if not the same size, marketplace. So you've got this London market which is made up of the Lloyd's and the company market with that central bureau, and the benefits of that central bureau in terms of central settlement are fantastic. The actual physical money which has to move because of the central settlement, or the reduction in physical money that actually has to move is a real crown jewel of the London market.
So, and just to take a quick step back, so we one of our most popular countries for listenership is not London.
It is not,
for example, and we've got people listening who are probably newer to reinsurance. If we were to try and put this in really simple terms, we've talked about things like standards and this concept of a message, which actually I remember when I first came into the industry, this, especially as somebody who was more of a digital native, this concept of a message was the most elusive thing. I was like, what do you mean? Why? A machine is sending an email? Or what is this message thing? It'd be great to get your sort of like, how does the legacy market work? What is this method of exchanging files or information or otherwise?
Yeah, so you've got in the legacy market. So if we let's go through a non-London kind of example as such. So broker and underwriter will agree a reinsurance contract, and I suspect there's been some conversations, there's been some emails that are going around. There is then a document which has been finalised. The issue that occurs at that point is that those contracts are complex, with the best will in the world, and they're not sort of straightforward. And the broker will be capturing information about that contract within their broking application system, their administration system. Meanwhile, the reinsurer will also be capturing information, and you've got a central document which is complex to get to understand, and the interpretation of both the broker and the reinsurer could well be different. So the expected premium then flows through. Well, the broker obviously is invoicing the customer. The broker is collecting that invoice, collecting that premium. They'll share that with the, or look to pay that to the reinsurer. In the legacy world, they'll send a spreadsheet in support of that, saying, "Here's are all of the premiums that I've collected. Here's a single payment that I'm making." And then the reinsurer has to take a single sort of monetary transaction with a associated spreadsheet and then work backwards and say, well, actually at that individual transaction level, I didn't agree that. That's not what I sort of took away from the policy. So you end up with this kind of mismatch. Very late on, as in the customer, the clients pay the broker, it's the premium that's owed to the reinsurer. They're keen to collect that and make that money on their books. So if we take the idea of a kind of a message, like sort of at its notional level, the broker can book the transaction into their broking system and say, right, the contract's been agreed. This is my interpretation of that contract. Before I invoice the clients, my system will generate a set of structured data, an invoice. This is the amount of premium that we are going to look to pay for you at the point this account becomes payable. So once we've collected the money, we'll look to pay you this amount, and they can share that structured data with the reinsurer, and the reinsurer can look at that, compare that to the policy, and go, I agree that, or I don't, and I can have a sort of a kind of query loop back and understand and get to that agreement way ahead of the client paying, because the client is probably on a 30 days, 60 days, 90 days terms of trade. Let's get all of that query processing up front. So that's the transition that the legacy market went to in the sort of messaging world. They started using that structured data to give early sight of what the broker had booked to the reinsurer or to the insurer, and they can get to a position of agreement. So when the client pays, the money's been pre-authorized. So you have your unreconciled cash effectively goes down to zero.
And these are the XML messages.
Yes, this is good. Yeah, typically EBOT, ECOT. You can
because people hear these terms and they're like, oh,
well, I don't think we make it easy for ourselves. So you've got EBOT, ECOT, which is electronic back office transactions. So the technical account information for premiums, the statement information that you get. You've got ECOT, which is the claims messaging as well. So initial claims advice, reserve changes, kind of all go through, and so you've got these standards for that. There's an initiative which was set up 15 years ago specifically to look at, and it started in the reinsurance community, it's been extended out to the insurance community. That's the Rushlicon initiative, which was sort of doing that. And when we look at, again, sort of pulling it back to Blueprint 2 and adopting these standards, what they're actually saying is that the phase 2 of Blueprint 2 will be to use the EBOT and ECOT standards, which have been sort of utilised for 15 years elsewhere in the rest of the world, which is a really positive thing. Yeah. My caveat, which I'll come back to, as I mentioned earlier, is we have to be really, I guess, intentional not to add back in any kind of London market processes. Like if you're going to be aligned with the rest of the world, then be aligned with the rest of the world. Let's build on the experience of these companies been doing it for 15 years, recognizing these companies will have a London market platform as well as a sort of a London market bureau platform as well as a non-bureau platform as well. So they don't want to have a different back end process for their London market business.
Yeah, there's a bunch of interesting nuance to that. So you have like the company accounts in London, or the company sort of entities in London, and then the divisions of those entities that either sit as syndicates or as sort of bureau markets as well, which means they sort of lend themselves into this bigger framework that allows them to be structured that way.
And I think it's really important to note that people have a sort of choice in that. So that they have a physical stamp, and we're still, in certain situations, still in the kind of physical stamp world, and that stamp can either push the business or the broker then routes that business through the bureau, or it doesn't. It does on a sort of peer-to-peer basis, and both are available. So we need to really be clear that there's a good intent to go down the route we are, which there is, but the benefits there need to kind of come through on that basis.
Do you see there being an opportunity off the back of Blueprint 2 for the London market more broadly to not only like catch up to the rest of the world in some ways, but reestablish itself as like a center of excellence, in that every company, if we look at worldwide, every company has to act independently in their ambition to modernize. Where if you can take the London market and get that collective alignment, you might be able to move the entire market directionally one way more quickly than the speed in which you could get every single individual entity around the world in that same. Is that kind of the ambition underlying Blueprint 2?
I think it's got to be. I think if we think of Blueprint 2 as being, it comes online on the 1st of July next year, and that's the project that that's the kind of end date that everyone's working towards, then we've looked at it the wrong way. I mean, that should be seen as the 1st of July is the start date next year for the kind of phase 1. So that sets in place the new cloud-based infrastructure that's there. So that then allows the kind of the future to happen. With phase 2, you have this alignment then to the rest of the world. That's kind of a good thing. You've then got some efficiencies around that. We should be able to speed up premium payment and claims payment. And, let's be honest, claims payment is the kind of, that is our product as an industry. So we need to be able to make sure that is appropriately done. But once you've then got a sort of digital standards, or you're moving data around in a much more kind of seamless way, then it's like, well, what's the opportunity that affords? It's not a case of, right, we've now aligned ourselves to the rest of the world, that's it, it's job done. Blueprint 3 said no one ever. It's like, what do we then, how do we build on that? How do we then say, right, we've now established ourselves, and that's where the things like having central settlement, like having a central bureau which allows work to be done on behalf of the many by a single, we are a syndicated market still, so if you can streamline some of those activities, it makes London maintains its competitive advantage, or it allows it to kind of catch up depending on your location and how you see London sort of currently. But yes, it has to be the sort of start of the journey, and we've, I think, as anyone will attest to, we're never done in reforming the London market. No one's ever going to say, right, that's it, we've reformed. That's not kind of the process.
And I'm sure there's like some relatively unsung heroes and successes that have taken place where we've at least overcome some pretty big challenges along the way, or at least made them less painful than they were. What for you are sort of the highlights of, even the last 20 years, really, that we had to I figure out these things, and we actually found a way to do it?
Yeah, I think that's it's a really good question, because I think we do often beat ourselves up as a marketplace, especially when it comes to large, kind of technology projects, because they're not always covered in glory. To me, there's a few notable highlights. So claims processing. So again, I'll come back to claims has got to be the key focus, I think, of any reform agenda, because if you're that's where you get your real customer benefit. If we're providing a better service to customers on that basis. We don't have to go too far back in history to have a claims file, which was a physical paper document. If you had multiple agreement parties to that claims document had to physically be taken from office to office. And that generally meant taking a claims file into an office, putting it into a sort of filing system on the side of the wall, and coming back the next day to collect it, hoping that the underwriter agreed it, and then go to the next. So you've got a process which by very definition is in series. So it's very hard. You can make small incremental changes. You could say, well, I'm only going to leave it for half a day, but you're not transforming it. So to have an electronic claim file and say, right, we're going to create a claim file which is then available to everyone at the same time, we can then take a process which is in series, put it in parallel, and speed up. And the claims repository, I think now, is the world's largest document repository. It wasn't necessarily it wasn't embraced with open arms at the time when it was first set up. There were some challenges in doing that, but I think now if you try to roll back and go to paper, then it's not going to be. You wouldn't be thanked for that. I think we've also got to mention sort of trading platforms, placing platforms. We have been through a pandemic. They shut the Lloyd's room, got shut for the first time ever. And you think about what's happened since the 17th century, and various things that have happened over history to never shut it before, and then have it shut. That is a kind of once in a, well, not even generational. That's a major event. If we didn't have some of the technology support of placing platforms, trading platforms, that would have had a significant detrimental impact on it. Well, I don't know how the market could have really stayed relevant or survived. So to have some of that technology, again, not always greeted with open arms when it first comes to market, but actually people are, well, it's a very good job that was there and good in place otherwise.
And does it, I mean, some of the challenges, I guess, are probably still unsolved as well. I'd be interested to hear where some of those maybe WCL are working on in particular, but all sorts of things you have to decide to get a standard way of communicating so much information across everyone.
Yes. Yeah. I there are, sort of nuances within that. And then within standards is a very sort of tricky play. If you look at, and I know people often juxtapose sort of banking to insurance, and that's and I think if you try and look at those two, it's not that helpful. I think banking typically is very much transactional. It is this person is paying this person on this date for this amount, and there's a currency element to it. There's very defined things. We're not in that world in the kind of insurance. So I think if you try and have complete rigidity, that can be a real sort of challenge. And so our role often as a kind of messaging provider, or providing that plumbing or connectivity between the different trading parties, is to just take out some of that noise. So to almost allow people who have adhered to the standards, but there is some sort of flexibility built into that standard, allow them to communicate to someone else who's adhered to the standard, but using flexibility in a slightly different kind of way. So, we're not a case where two people just be able to, it's not quite that sort of straightforward plug and play, and that's why you end up with plumbing in between, just to sort of ease the commerce piece.
Yeah, and you can see over time, everyone sort of solved some of these problems independently. And so they looked at the way that they tackled it for the unique way that their business did that thing, and another company tackled it the same exact problem, but with a slightly different sort of angle they approached it from, or direction they approached it from, but compounded over generations and technology iterations. Now you're left with trying to get them all back to a single way to do something, and they also had to figure out the way that they convert or manage to that new standard, that new sort of position.
And I think that's the real challenge with the London market being very used to doing things in a kind of London specific way, adapting to a global standard and resisting the temptation to kind of go, well, we're a little bit different, so we're gonna keep doing it this way. Well, then you very quickly kind of unravel some of those things. But it's a real challenge. You've got one element which is the standards. So you have the data standard which is published. You then have a kind of a business process or a kind of interpretation of that standard. No one quite interprets it. There's a business process element to moving data around, not just a straightforward here's the data.
And I guess London is often a pioneer to some extent in things like new lines of business that previously might not have had a mapping, or will make an existing mapping look very weird if you start pouring lots of that new line. Like I think cyber's relatively new in that respect, or some of the classes that are popping up nowadays, like the innovation type things. How does the market respond when the standard needs to change as well? I suppose must be quite interesting. I mean, companies acquire each other and entities change, or regions change even at this rate.
Yeah, I mean the nuances then between like different countries, different class of business. There is a, not wanting to get massively into the nuts and bolts of the standards piece, but there is an interesting, which I think is a benefit. So we're typically looking at the large commercial and reinsurance standards. So there is a specific standard for it's global large commercial and reinsurance, different from the kind of P&C standards you tend to have in the US, all within an accord, all within that kind of structure of standards. But the route the US took was to have like each line of business had its own standard. So you then have systems which are very kind of product based. So well, we've got a new product, so we need to add this line of business to our existing product set. Within the large commercial reinsurance standard, class of business is an element within the structure. So you don't necessarily get all the granularity that you'd have in a sort of very specific line of business, but it gives you a lot more sort of here's a standard message. It's the same regardless of which line of business that you're using. Which, when it comes to the back office processes, the accounting and settlement and the claims element to it, rather than placing, that's a really good place to be. So you're not having to create a whole new accounting settlement standard because you've got a new cyber risk, for example. So there is it does raise some challenges on the placing side and around the data bit.
We're running up on time now, but I had one last question I wanted to end on. As we sort of are approaching the summer deadline for Blueprint 2 to sort of the kickoff, what are the things that excite you about that ambition, and what are the things that you sort of look towards with apprehension or timidity of?
And it's a good question, because there are those two emotions are absolutely really high. Like this is a great time for the London market. There are some things. So whenever you have a central infrastructure which has been around for a very long time, you have a drop dead date when that infrastructure will effectively be no longer communicating out to the market. The brand new infrastructure that's been built, everyone has to connect to that. So that's probably 500 companies that kind of impacts from a single day. And if that infrastructure is not or if people are unable to connect to that infrastructure in an appropriate way, that has a direct impact on the movement of premium and the movement of claims. So these are kind of big ticket issues. So I think, we are going around through a process with all of our customers at the moment, just making sure they're all aware of Blueprint 2, but then just talking through some of the mechanics of what does this mean to you as an organisation. Yes, you need to connect to a different set of infrastructure, but those messages you've been getting since the 1970s, which have been processing through a black box into your policy administration system, which no one has touched and no one has looked at, you just need to be really kind of conscious and aware that when that switches over, that everything's going to work in the way that you expect it to, and therefore testing becomes quite sort of critical within that. So there's that element, and is everyone on the same day? It's a kind of there's no immediate way that I can see to roll back. It's kind of going to be a fix forward from that position. So that these are things which are technology point of view are would keep you awake at night, I think. To a certain extent. On the flip side, I mean, I think hopefully we've kind of covered the positive elements to it by aligning ourselves in this way, by using structured data, but being much more efficient as a marketplace, is a really good, solid sort of platform to build on from there, and which should then have a very positive impact for the London market going forward, which is a market which is certainly close to my heart and close to the heart of many of our customers in that period of time.
No, excellent. We'll end there. That was a fabulous answer, and it's a market that's ever changing, and you guys are at the heart of it, as we are. So excited to watch it with you. Thank you for joining us, James.
Absolute pleasure. It's been a delight. Really enjoyed it.
Thanks, everyone. Until next time.